traders, welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 4th, 2012. Lots to talk about, so let's get started. Well, first of all, I'd like to say happy July 4th. I hope you're having a good time on your day off. Hopefully you have a day off today. In any case, let's take a look at some charts. This is the SPY, which is the ETF that tracks S&P 500. And let's kind of look at what happened yesterday. Now, there's a lot of bullish sentiment out there. Obviously, CNBC and everybody else's mother's uncle is saying we're bullish, we're bullish, we're bullish. But again, like I said many times before, on low volume, it is very hard to short. When you want to short on low volume, it just makes it very difficult. It's definitely not impossible, but the odds are going to be against you. Yesterday we traded at 80 million shares. Why? Well, for one reason, it was only open half a day, and when the market's only open half a day, you're going to have low volume. In addition to the only opening half a day, a lot of traders were taking off from work, not trading anymore. They're on vacation. They're out having fun on this vacation week. So, you have a lot of or lack thereof sellers out there, which gives the institutions a chance to prop the markets higher. If you don't have enough sellers out there, the institutions, can easily prop the markets higher simply because they have billions of dollars to do it, and that will give the bullish sentiment into the general public or the retail trader. And when they start going long, is when they start selling off their shares, and then that's when the markets start coming down. So, in any case, make a long story short, please keep in mind that on this low volume here, on this huge up move here, I mean, don't think of anything other than a possible head fake, and I would be, in my opinion, looking to short. Okay, the only reason that I would think that this downtrend would be negated is, okay, we have this high right here, okay, and then we have this lower high here. If by some chance we close above this high here, then that pretty much puts this downtrend in a neutral standpoint. Okay, do I think it even gets to this level here, or this 141.36 level? I really doubt. But again, it's not what I think, it's what the charts are telling me. And right now the charts aren't telling me anything otherwise, meaning there is nothing that's telling me right now that it couldn't get to the 141.36 level. But again, we are in a downtrend. We are in a confirmed downtrend. There's nothing telling us right now that the trend has changed. Now, in a little bit of a shorter period, now this is more of a longer period, but in a shorter period, we are still in this somewhat of an uptrend. We have a high here, a higher high, and we have a low and a higher low here, and it looks like we're going to make a higher high. In fact, that's already been confirmed. We already have a higher high. So whether or not you think this is a trend change, the fact matter is we have 3 highs here and we have 2 higher lows here, which indicates that there is a trend change in a short-term period. Okay. Another thing that sometimes I like to do is obviously look at the weekly charts to give me a better hint. Again, we have this high here, and then we have this lower high here, and we still have not made another lower high yet. But at the same time, we've never made a higher high. Okay, so that's something to keep in mind. Okay, and we still have not made a lower low. So sometimes looking at the bigger or larger time frame will give you a better idea of where the trend is still pointing, right? So right now we are still in a downtrend and nothing telling me that we change. Therefore, we want the trend is your friend and you want the trend to be on your side. So I would look to short, not to go long, not right now, especially because it'd be definitely chasing. Okay. All right, and switching back to the daily chart. Okay, so what exactly happened to the SPY on what was that, Monday, Tuesday? Tuesday, yesterday. Okay, so we pushed to this 137.09. This level didn't even really hold on the intraday level. None of these levels here held intraday. But again, when you have low volume, it's very difficult to short. Again, it's not impossible, but it's very difficult to short. And this is a perfect example why. I mean, we'll get a push higher or float higher. Let me show you. Since I showed you the weekly and this is the daily, let me show you the intraday. All right, this is the intraday chart. We have the beginning of the day here, then the end of the day there, and then it's a 10-minute chart. As you can see, when we open, we just kind of just floated up. You see that? We just kind of floated higher. There is no, huge volume spikes or anything like that. If anything, it'll be this this area here where we had a substantial volume. But other than that, I mean, it was just a float higher. Okay, so that tells me that there's just nobody in the markets right now that wants to trade. Therefore, it's easy for the markets to just float higher. Okay. Now, could this all change tomorrow? Yes, definitely, because we are in a pretty good resistance level here. We did not confirm and close above this candle yet. That should be said or looked at tomorrow. And tomorrow I do expect what you call somewhat of a hangover day, which is the day after the holiday. So again, Monday, Friday, day before, and day after holidays are normally low volume days. Yesterday was a low volume day. Today's a holiday. The markets are closed, and tomorrow I expect it to be another low volume day. Now there's a bunch of stocks that I'm keeping my eye on, and that if it reaches a certain level, I'm going to short. And then there's actually stocks that's actually already hit the resistance point, but I have not shorted them yet simply because the volume is still too low in the markets. Now, if I see a resistance level hit on one of the stocks that I'm watching, if you watch the previous videos and you keep an eye on those stocks, if those resistance levels hit, say on Friday, or even better, Monday or Tuesday next week, then I'll probably take a short. Now the question is now timing. Is the market's going to turn over tomorrow? Is the volume going to come back? I'm sorry. Is the volume going to come back on Friday, Monday, or Tuesday, or that kind of thing? And if the volume does come back in the market, then I do expect the markets to pull back. Okay, we had this huge move up. We're not yet overextended or oversold, but it is a very, very big move, fast and furious to the upside. But again, that's based off of low volume, so that does not solidify or does not validate this move here, which means I expect a downturn shortly within the next week. Okay. So in any case, I did another calculation because of this move today, and I also have this level here, which is 138.95, and then we also have this 141.36. Again, I don't think it gets there, but the 138.95, if we can get there on Friday or Monday and Tuesday, then I'll be definitely happy to take a short here. It's going to be a little bit of a higher risk trade to short because it's not in a major support or resistance level, but again, we're just floating higher in low volume, so at any time this thing could just turn over and just come down pretty hard. What I'd really like to see is a doji candle here, right? That would be a perfect play, and higher volume. Okay, so say tomorrow we open, which is Thursday, and we have another low volume candle here like this, and then Friday we get a huge volume candle like this, which surpasses the past 3 days here, and then we create somewhat of a doji candle of some sort, then yeah, then I'll definitely take a short. But it doesn't always happen that way. It doesn't always get planned out that way. Sometimes you'll get huge volume. So right, so Thursday we have a little lower volume, and then Friday we get huge volume, and then that huge volume comes in and we already turn over and start coming back down. To me, that would be chasing anytime after that. So you got to kind of just catch it. Maybe Friday, Monday, Tuesday. Friday should be low volume because that's just the normal. Friday is low volume, and then Monday, Tuesday, or Monday is normally also low volume, so Tuesday I would expect the markets to turn over. Okay. Again, everything is taken day by day, and we have to just read the charts and see what the charts are telling us. But you know what? If we can float up into Tuesday, I'd be pretty happy because once we start hitting resistance level on certain stocks, then I'll probably be taking a short. Bottom line is the markets are floating higher. I would not base my trade on the float higher, however. Okay, just keep that in mind because I do see it's only a 75% ratio where the markets will float higher on low volume. But as you all notice, on low volume, the markets can still turn over and have a sell off. Okay, so just keep that in mind. Now this is a chart of the UUP, and I'm going to contradict myself real quick here. I found this trend line here, which is a pretty valid trend line in my opinion. We also have this support level here that I'm going to take out for now, but I had that in the previous video. We have this support line here, and then in this area here, if the US dollar can come down into this area, I think this is a pretty good support area where we have the 2-inch moving average, we have this 2216 calculated level, and we have this gap fill and then pivot point level here. So around this area here is going to be pretty good support. Now what I see in this trend line here is if you take a look at this, no matter how I draw this, if I use the tails or if I use the bodies, it doesn't matter. We broke down from this trend line. We created this doji candle right under the trend line. Okay, even being conservative, we opened above the trend line and then sold off. Okay, now as we all know, the dollar is opposite of the S&P 500. Dollar up, markets down, etc. Okay, so we went right into this 50 moving average again. So that's 3 hits. We have 1 hit here. Okay, we have 2, and we have a use and abuse moving average here, which is now not in play. What does that mean, not in play? I don't really trust this moving average anymore. At any time this thing could break down. I mean, it could possibly break down as early as tomorrow if the volume continues to be light and the markets continue to flow higher. So if the markets go down and continue down into this level here, we're going to have some pretty good support there. Again, we had this like any trend line, right? After you break the trend line, if you don't get a confirmation close below this candle here after the breakout, then that simply means that it is not a confirmed breakdown, and thus there is a possibility that the stock can go back up into over the trend line here and then keep on trading within this trend line here. So that is definitely a possibility, something that you want to watch out for. The 20 moving average again is still going to be some minor resistance. It's going to be minor, it's not going to be major, but it will definitely be minor. If we can close somehow above this 20 moving average, then say goodbye to the markets, because markets are coming down. And then we have resistance here, we have resistance here, and then of course we ultimately will have resistance here. But once we break out and close above the 20 moving average, I think we're going to start hitting these and testing these resistance levels there. Now, if we don't and we close below this 50 moving average, or I should say, actually, if we close below this candle here, that will not confirm it, but it'll solidify that there's more possible more downturn to go. So right now, even though we have this trend line here and we're back testing it and we weren't able to close above it, and because this 20 moving average is over here, you just have to keep in mind that because we did not confirm below this trend line here, it just means that there is a possibility that we may start trading above this upper trend line here. So you want to keep that in mind and not bank on the dollar coming down into the support line here. But if you watch the dollar and the dollar does somehow get into the support line here, we're going to get a bunch of resistance, and that in turn will bring the markets down. Okay. So I'm just going to run through some stocks here. Here's his stock of Walmart. I had a level here at $70.56. And again, in like the previous videos, like I said, if we hit this level too early, which is what we did, then I'm not going to take the trade until it hits the 72.22 level. Okay, we had a huge jump, $1.40 on Walmart. Again, this is a beast. You don't want to short strong stocks, you want to short weak stocks, and you don't want to go long on weak stocks. You want to go long on strong stocks, long on something like Walmart. So if the market's floated higher and we hit this 20 moving average, then that would have been a good indication to go long on Walmart, and you would have been nicely in the money. I missed this here. I missed this trade here because it hit the 20 moving average and I expected a float up. But timing is everything, in my opinion, right? I mean, we all know that time is everything. Timing is everything. I mean, even in general life, timing is a big thing and very important. Now, if had this hit on the beginning of this week, which was 625. Right, so this actually hit on June 25th. If this actually hit the beginning of this week, which was like July 1st or something like that, then I probably would have taken the trade, because the upside bias, because of low volume, and plus we hit this 20 moving average, and this is a beast of a stock, I would have probably went and taken a trade to the higher side. Now it hit the 20 moving average again. To me, use and abuse again. I will not take this trade simply because after it hits it the first time, I'm just not gonna want to do it again. Okay, it's just it's not as strong. It's like if you keep on banging on the floor, eventually you're gonna break through, and that's not what I want. Okay, so in any case, Walmart caught a bid. It closed above the $70.56 level. If we get another candle and close above this based on the low volume, then I will not take a short trade until it hits the 72.22 level. Okay, and the 72.22 level coincides kind of sort of matching with this upper trend line here, but we are in a double top already. Okay, the double top was actually around $70 or so, a little under $70.56 was a double top. Let me show you guys what I mean by that. All right, this is a weekly chart. If we just zoom all the way out back into the year of, let's see, 1999, we have a high of $70.25. So we are already in a double top. But like a lot of people don't understand is, if a bunch of people bought the stock here thinking it was going to go higher, this is, years. I mean, over 10 years. I mean, is anybody really going to hold the stock for that long? You know what I mean? They probably, most likely, or most people probably sold it off already. Which is why you're not going to get a lot of resistance when it's so far behind. When you have a double top and it's this many years behind, so a lot of times you're not going to get a substantial resistance, which is why we punched right through it like butter. Okay, now this is, however, still a resistance point, because I'm sure there's still people buying into it, and we are going to have a level here at 72.22, so I'm just going to have to wait patiently for that to hit. If it does hit, then I'll probably take a swing short. Again, timing is everything, so if it hits on Friday or Monday, then I'll probably take a swing short. If it doesn't hit by then and it starts turning over, then this trade is off the table and I look for something else. Alright, this is a chart of Apple, the infamous Apple here. So here's the thing with Apple. Like in the previous videos, I talked about the $600 mark. The high of this candle here was exactly $600. And my level here was $600.49. So I was about 50 cents off. On a $600 stock, that's not bad. Okay, that's less than 0.000 something percent. Okay, now in essence, the question really is now, are we going to get a a bounce off of this level here. Let's take a look at the intraday. If we look at the intraday, this was the beginning of yesterday, and this is the end of yesterday. Let me kind of just zoom in here. Boy, it was just such a sideways trade that my charts just look kind of ugly. So anyways, Apple popped up, bounced off of my level here, and is now just consolidating sideways right over this 20 moving average, ready for a pop. Let's look at the hourly chart here. Okay, so we had this up move. Okay, so this is basic. We have this up move, we consolidated, we have this up move, and now we're consolidating right under the $600.49 level, which means it could pop into the $612 level. Now anything can happen tomorrow. Tomorrow we may actually start turning over, but again, I cannot make a short trade on low volume. That's just one of my rules, something that I need to follow. But we do have a level here which is around 612.34. I also had a level here at $607 that I'm going to keep my eye on, that I had here in the previous videos. I took that recently off because of the big move that we had on last week Friday, or the 2 Fridays ago. So that's just something to keep an eye on. If we go back to the daily chart, against a 612.34 level is going to be another nice short position. We have this 3 day in a row pretty big this is like the three white soldier kind of pattern here, but you know what, again, I really can't take the trade until his 612 level. It could already bounce off the $649 level, but right now when I look at the intraday trade, that's not telling me what it's going to do. The charts are actually telling me it's consolidating for another push higher. Whether or not it does it is the question, but again, you want to do what the charts tell you, not what you think. Okay, so that's up. This is the chart of the FCX. Let me load my drawings here. This is a daily chart. And again, it's going right into my 36.86 level. It hasn't really gotten there yet, but it got really close. Okay, so if we get another push higher here, say on Friday, or especially, I mean, if we can get into this 38.01 level here, or $38 flat level here, I would be really enticed to take a short. In fact, I already think about shorting at this 36.86 level. Okay, but if it can get and pierce, if it can pierce through this 36.06 level because of low volume, and we can get to the 38.01, this is to me a dead short, meaning I will not hesitate and I will start shorting the FCX. And this is another reason why. This is the weekly chart of the FCX. You have this trend line down here, which coincides this with this $36 level. Okay, but ultimately we also have this 38.01 level, which is a 386 Fibonacci. Also, we have this 50 moving average coming right into it. That's going to be really good resistance. So somehow it can pierce through these two. Let me kind of just zoom in here. We have this blue. Let me just delete all my drawings here. Okay, look at this. So we have this trend line here, right? Kind of like that, and then we have these two moving averages here, which is the 200 and the 20 moving average. That's going to be pretty darn good support already. Okay, but that's at the $36 level, and it came pretty close to it, so we may get another push higher. Now if we can get somehow a push higher, a push right into this 50 moving average here, and because I have that calculated level on these both levels, on both of these levels here, then I'll definitely, without a doubt, probably take a short at this level here. This one, you know what, if we can get into this level on Monday, we're kind of close to it already, but if we can get to this level on Friday or Monday, then I'll probably take a short on the FCX. Okay, so that's about all the time we have. You know what, let's just take a look at gold. Actually, not gold, let's take a look at the ABX. And the reason why I want to show you ABX is because we had a level here, which is a 38.58 level, which had these two mathematically calculated levels here, which one is percentage wise and one is a solid number. And we went right into this level here, and we kind of pierced and closed above it. We also had this trend line here, this is the weekly chart. Let me switch to the daily. Okay, now if you look at the ABX is a pretty strong stock. It's in relative strength simply because it closed above these two moving averages. It closed above the 50 and the 20 and these two calculated levels, and it closed above this upper trend line. Did it really close above the upper trend line? Maybe not, actually. Let me just draw this a little bit more exact so we get a better picture of this trend line here. Okay, so did we close above this trend line? Actually, no, we did not. Let me just save this drawing so I can keep this for reference here. Okay, so we did not close above this trend line, so we could get some resistance over here. Now, if we close above this level here, then that'll tell me that we're going to go higher, possibly into the 39.88 level. Okay, now here's something to keep in mind. Again, this is low volume. It's hard to short, and this is why I haven't taken the short on the ABX, because of the low volume. It's very difficult to short when you have low volume. It's not impossible. Again, nothing is impossible in the stock market, but if you want to put the odds in your favor, when you have low volume, you don't want to short. Okay, and this is a perfect example. In addition to the reason why I didn't take a short on the ABX, because ABX is a gold mining company, and sometimes, or I'd say 80% of the time, it does follow the GOD, which is the ETF that tracks gold. So it would make sense to do an analysis on the GOD to see if there's a potential for more upside. And because if the GOD goes up, then the ABX would probably go up as well. Okay, so we have these two levels here, which is still at the 160 level here. We have this huge trend line here, okay, and we broke out and closed above. Again, if we close above this level here on Thursday, then hopefully we get here to the 160.71 level, which would also be the 200 moving average by either the ending of this week or early next week, in which case I take a short to and expect the GOD to come back down. Okay, so that's just my opinion. Not definitely not a recommendation. This is definitely all the time I have for this video, and I appreciate you guys coming to watch it. Thank you very much. God bless to you all, and I hope to see you in the next video.